2, 1. All right, we're back. We're live. Roman, how are you doing today?
Hey, Sunny, I'm doing well. And yourself?
Awesome. I'm doing great. I'm doing great. Roman, I like to kick off most of my shows with just maybe a sentence or two about the company. So PM Insights, and then we'll put that on ice for maybe 10, 15 minutes, talk a little bit about yourself and your background, and then come back to the company. Yeah. So do you want to maybe share a little bit about what it means going from open to opaque?
From opaque to open, yeah, absolutely. Yeah, I mean, we started PM Insights with Nick, our CEO, and my co-founder in 2021 when private markets were booming already, especially the growth space for VC-backed companies. People clamoring to invest in these late-stage pre-IPO companies, and obviously also a ton of IPOs happening. So that further drove the FOMO, and yet people really were struggling to understand where to price. If people who were looking to sell their equity, maybe early stage employees or very early investors, or people looking to get into these companies not via a primary round, but again via a smaller check in the secondary market. On both sides, there was real lack of understanding of where the market is, or at least a lack of clarity. And a lot of companies were, a lot of funds, like even larger investors, were just basically holding at last round, saying that they'll wait for the next primary round to change their mark, which perhaps was all good when things were going up and to the right, but very quickly the situation changed, right? So the boom time of 2021, early 2022 led to a substantial sell-off and de-risking, and a lot of these companies suddenly were unable to raise, and the time between rounds extended, and people were still clinging to the idea of holding to last round, but it became very quickly apparent that that just didn't make any sense. And we were one of the first, if not the first, company to show this, because working with a consortium of brokers active in this space, we're gathering data from the secondary market in terms of where people were, bidding or offering to sell and striking trades, and taking that information and producing pricing across these late stage companies, and showing that the secondary market, especially as things started to come down, the secondary market was pricing them way below the previous round, right? Which was typically happening in 2021 at the peak. And soon after, of course, we started seeing companies like Klarna do a massive down round, and a bunch of others in late 22, early 23, forced to take whatever they could get because they were running out of runway, and the conditions were very different. So those down rounds were essentially predicted by what the pricing that we were able to produce from the secondary market. So our core focus has and remains this secondary market based pricing feed, pricing data for these growth stage pre-IPO companies, VC backed. But obviously, we've been around for a few years now, so we've built on top of that a number of analytics and additional functionality that allows people that are active in the space to get a better understanding of the market as a whole, not just on a company by company basis, and also interact with others in this space, get a good idea of price discovery, as well as obviously use us for evaluating their portfolios. So we work with a lot of different funds, from hedge funds and family offices all the way up to huge trillion-dollar asset managers, using us for the things that I described. And we also discovered a bunch of new use cases and clients, people lending in this space, lending to founders or early stage employees against their equity, or to funds against their equity in these companies. So alternative lenders as well as private banks. Yeah, so it's definitely been an interesting ride, one of discovery, and we have a lot more in the pipeline. Looking to broaden and deepen the coverage that we have across this private market space.
Interesting. So to just to really simplify it. So you're essentially working with employees at these like super high growth tech companies. I don't know if you're able to name any of these. Like, are we talking like the Claudes and of the world, and I don't know, like the Chat
Not
Open AIs?
employees. So not
Oh,
employees.
you're on the other side of it. So what
We're just with
you're
the brokers. So the brokers who are active in the space. So like it's just like when you're looking to buy or sell a house, you'll end up inevitably doing that via a real estate broker.
Mhm.
So in this space, um, there was also brokers, right, that help people buy and sell these shares. The market is, quite illiquid compared to obviously public markets, highly liquid compared to public markets. And there is a clear need for intermediation in many cases, because especially if you're a smaller investor or employee, it's much harder for you to find buyers or sellers unless the company is doing something to help you, which sometimes does happen, of course, but
Yeah.
oftentimes that doesn't align. The company only maybe does something once a year, whereas you might need to, I don't know, you want to buy a house or whatever, you might want liquidity for your fund. So that's when you might want to come into the secondary market. And yeah, there is a plethora of brokers out there. We work with close to 50 now. And they are the ones that we're getting the data from, because we work with them on a give-get basis. So we get anonymized data from them. Obviously we don't know who they're dealing with, but all we know is what sort of bid offer or trade is taking place in, or they're having a record of in a SpaceX or a Stripe or Anthropic, right? The maker of Claude or OpenAI.
So it's
And
these
we
people. Those people essentially are looking to liquidate their private stock because the company's not public yet, and they
Yeah.
work with a set of brokers, and the
Yes.
brokers work with you, and you guys essentially connect the brokers to high net worth or home offices, institutional capital as well, or
We
like,
could sometimes connect. We're not. Our role is not to connect. Our role is to bring that sort of transparency and openness in terms of pricing and valuations to these, to this space. But sometimes we do connect. I mean, connections kind of have started to happen organically as we started having more clients. So on the one side, we have the brokers who share the data with us, and therefore they have access to the service without having to pay for it, as long as they keep contributing. On the other side, we have paying customers who want to have access to this pricing, right? Like they want to understand the market, but they're not contributing because they're on the buy side, right? Like they're a fund, like a hedge fund or a family office,
so
right?
Roman, can you double click on this idea though of like what's the specific role you play in identifying valuation and price? Like, I mean, that's a very complex. There's so many variables that go into that. I recently had a conversation with a gentleman that helps companies like BlackRock even with things like cap tables, and he was just explaining how deep some of these ideas are, and how most people don't even understand what's going on with their own cap tables, like let alone other people's. But so can you talk a little bit about like how you, like, as you said, it's not as simple as, oh well, you raised it so and so valuation last year, therefore. But yeah, I'm just really curious about it.
Yeah, well, I mean, we're working with the brokers. We're getting their order book, and we're aggregating what we're getting from many brokers into a pricing feed, right? So if you have a few brokers that see people trying to sell, I don't know, let's say SpaceX for the sake of it's one of the most famous private companies out there, and then we have some that are looking to buy, and some of those have already completed trades. So all of that data we get, and then we basically run an algorithm which merges it all into a pricing feed, right? And all of that is used to create a price, which is meant to be like an approximation of a mid-market price per share. And on top of that, we can create a valuation as long as we've been able to source like an accurate share count for the company, or at least an estimate of it. Then we create a valuation, right? So that basically gives people an idea of what's happening in the secondary market. At what price or at what valuation are people ready to transact on in SpaceX in this case, right? Or it could be, but it could be, as I said, a bunch of different companies. And we're doing that as well as providing a lot of context on top of that, looking at funding rounds as well, looking at different share classes that have been issued by the company and what sort of conditions have been attached to each share class, looking at investors that are invested, also whatever information from funds that publish their information, on a quarterly basis in terms of like Fidelity or BlackRock, like what are they valuing it at? All of that information we also add to add more flavor and just more, context so that people who are active in the secondary market can understand what's happening to these companies.
Got it. Hey, Roman, I was reading that in September 2024, you rebranded from ApeView to PM Insights. Is that correct? So
That's
just
right.
curious, so private market insights, that's a big move. What was behind that decision, and what signal were you trying to send to the market?
Yeah, well, I mean, we were confusing people with our name, our original name, ApeView, and also rubbing some people the wrong way because the actual name, Nick came up with that name, ApeView, and it was basically a private equity view, so APE view. And also he learned that a group of apes is called a shrewdness. So, like shrewd investor will want to have obviously access to private market data. So there was like a weird play on words plus the acronym. But it turned out, first of all, it was a bit too complicated for people to figure out. And second of all, we'd often get confused with like NFT company or something like that, especially because back in that time, 2021, 22, NFTs were still, around and a hot topic.
Roman, I got one more question. So, because you brought up NFTs, so I don't know if you know, but I started India's first Bitcoin exchange in 2013. So it's
did not
still
know
in
that.
business.
Wow.
13 years later, our lead investor for Series A was Tim Draper, and our first investor ever, he invested in 2014, was Barry Silbert. Barry Silbert is not just the founder of DCG, but also the founder of Second Market, which is the company that was sold to Nasdaq. And so my next question was around that, which is, I read that you recently announced a partnership with the Nasdaq private market. Is that correct?
That wasn't recent. That was quite a while ago. So that was also back in 2024. And we did have a partnership. We were supplying them with data. They were using our pricing data to help basically inform people who are looking to participate in tender offers at the companies that they were facilitating tender offers for. So that was something that we were working with them with for like a year and a half.
That's impressive. Yeah, like something like that. It seems like a big deal. So in 2024 November, you also partnered with Syntax Data to tackle what's been called a $3 trillion private market data gap. Can you explain that a little bit and what that partnership entails?
Yeah, absolutely. So this is just another one of the things that we've been kind of layering on top of the pricing data itself. Is once you have pricing data for a certain number of companies, you want to know more what's happening to those companies that are perhaps not seeing any activity in the secondary market. And maybe you want to use those that are active as a way, to benchmark others that are similar. And with Syntax have done a really good job of creating, similarity scores for public markets, and looking, like to create the ability to look at comparables between, different companies, but like in a very granular way based on revenue streams and, type of customers they're looking to serve. Obviously, like the industry, the geography, and like a combination of all these different factors. And we partnered with them to do the same for private markets, to try and create similarity scores, and the ability to compare both within privates, private to private, but also between private and public. And that has been very helpful to, obviously for people who want to use comparables, in their valuations work. This has been a very useful data set.
Yeah, that's fascinating. You guys also recently achieved SOC 2 compliance. What kind of signal are you guys? Is that true?
Yeah, no, absolutely. We got
That's a
that.
huge deal. Yeah. So I
Yes,
guess
yes.
so congratulations on that. But I'm just
Yeah, thank
curious
you.
from like, especially for a data company, right? So I guess my bigger question was like, what are you trying to signal to institutional clients about,
Well,
how serious you guys take security and all that?
exactly right. I mean, this is, you know, it's come up in conversations, especially with clients that are, focused on audits and, just generally large institutions. They take this very seriously. So after, number of times where this would come up, they'd ask us about it. We decided to bite the bullet and go through the compliance jumping of hoops, and shoring up of infrastructure to ensure that we're fully SOC 2 compliant. And that wasn't super as easy as we thought it would be, based on some of the marketing that happens around all of this. All these new platforms have sprung up with AI enablement and so on, but you still need to do a fair bit of work on your end to ensure that everything is aligned in a way that allows you to show evidence, right, of the fact that you are in fact compliant, that you are in fact adhering to all these different standards. And
Last. Oh, sorry. Yeah, go
yeah,
ahead.
no, that was useful, and we've been able to restart some conversations that sort of faltered because we were not seen as, as a very small company, not easy to get through some of these very large institutional gatekeepers, procurement and so on. But since we became SOC compliant, that certainly was helpful.
Beautiful. So last question, Roman, if someone's listening to this and they're, let's say, an aspiring fintech founder, trying to bring transparency to some corner of the opaque financial markets, what's one piece of advice you'd give them that you've learned, along the way of building PM insights?
I mean, I'm not sure if the most important pieces of advice are specific to PM Insights. I'd say they're pretty universal, and that is really, um, you need to be very stringent at identifying your core customer groups and the pain points you can be solving for them very early on. And just iterate through that as quickly as possible, basically, and try and stay focused. Focus has been the most important thing, I think, that we sometimes lacked, to be frank, and learn from that. But yeah, like trying to do too many things at once, or trying to please too many different types of customers at once, is a road to a potential disaster. So definitely early focus on your ICP, and solving that problem is definitely the surest way to success, I would say.
Awesome. Well, thank you for your time, Roman. I appreciate it. Thank you for everyone tuning in as well, and for everyone else that watches this in the future. Yeah, anything else you want to finish on, Roman, or are we good?
No, good. Yeah, thank you, Sunny. Appreciate the opportunity to chat.
Yeah, I appreciate it as well. Thank you very much. Just hang out, Roman, for 1 second.